All right, hello guys. It is Saturday, May 28th, 2022, and this is my trade journal video. And really, if you're watching this video from YouTube and you want to learn more about Elliott Wave, the only place you need to go is ElliottWaveTrader.net. The greatest analysts on planet Earth, the greatest educational content on planet Earth to learn Elliott Wave, and it has the greatest collection of skilled professional members who are posting all sorts of things. So the educational aspect alone is worth the membership. So I can't recommend it highly enough. ElliottWaveTrader.net. Okay, so I've rewound the tape as I like to do and review my own performance. And right now, I mean, we traded this and we made exactly a $10 gain to the penny. It's just kind of funny. I had said I want to catch $10 here just based on the targets, but little did I know that it would literally be exactly $10. Anyway, so now I was looking to get long again. I haven't been shorting this. Just a quick review of the overall thing. What I've been doing is I haven't been shorting, but I've been catching these moves up. And I've caught a couple of shorts, but nothing, just scalps. But I don't like to trade the short side. I much prefer trading the long side. So that's what I've been doing. And we're in a choppy environment, so I keep that in mind. And my trading style has adapted to accommodate this choppy environment. So what I do is I make an entry and I move my stop to break even as soon as possible. And I either get stopped out at break even, or I might get stopped out on the initial entry, because the initial entry, of course, I have to define my risk. So my initial entry might have, risking whatever, risking 14 cents, risking 28 cents, risking 48 cents or whatever, and I put it in the room. So initially, that's the initial risk. And as soon as I'm able to, I move it to break even. Now, I got out of my longs up here at 113.93 and then was looking at structure, thinking, where would this hold? And I was thinking it would hold in this box. So that is where I started my first long attempts, and I can only really trade from like 6 in the morning until 9. I mean, in terms of entry. So over here, right in here, 6 a.m., 7, right in here somewhere, I'm going long, moving my stop to break even, get hit. So, and if you're a member of ElliottWaveTrader.net, a lot of us traders were posting our trades in here, so you can kind of. Okay, for example, risk, this is on the 18th at 7 in the morning. So that's like right here. I'm saying I'm risking 14 cents, take a long shot. I'm going long. Why? Well, because I think this might be support. At the time, I thought this 3 was going to be higher and over here. So I thought this was a 4 of a lower degree, and this is perfect place and there was a trend line there. So this, to me, was a very good place to attempt a long. And I did over here. And, whatever. Okay, stop to break even quickly as per my, so, yeah, I got stopped over here. And then I tried again. What did I risk? Somewhere. Okay, stop. Okay, I lost 28 cents. Is that the next day, the 18th at 10:40? Okay, no, that's the same day. So then I can't be on the screen. So at some point, I just got to put the trade on and move on. I got to get the kids to school and do other things. So in this case, I lost 28 cents after a couple break even. Okay, here I got right back on it again. I'm doing this from my phone, risking 17 cents. Move stop to break even quickly. Stay nimble. So I'm saying, I'm just saying, I keep trying. It's my 4th or 5th attempt. So I keep getting stopped. Look at that. Now price has just totally broken that level and came way deeper than I thought. And that's where I realized, okay, I was wrong about the degree, what degree this is, in terms of Elliott Wave. But my stops are always there. So, I didn't lose much. And after a $10 gain, can I afford to? This is just my risk style, my risk management style. Yeah, I can take a 14 cent shot, a 28 cent shot, of whatever, and keep trying to get long again. So that's what I did. I mean, it was frustrating a little bit, but that's fine. So once it came down into here, 18th, I thought I had hooked a fish, But just like the market loves to do, look at that, came down and stopped me out again. And now this is happening at 5 in the morning. So by the time I got up and got on screen, I'm starting to see this and I'm going, yeah. So I took a couple more attempts, but the one that stuck, look at that, took a couple more attempts, got stopped. And then when this happened, that reaction down there told me a lot. That type of reaction, again, it's like, I'm going to keep trying. So now I'm going to actually show you my entry. So now I hate trading on my phone, but this was on my phone. So of course, once I leave the house, I see these candles. After this bottom right here, this is the 5-minute chart. This is the 15-minute chart. That is this low right there. So I'm looking at this on my phone, thinking, oh, great, now it's coming back up. So when this inside candle formed, and this is just pure luck, I saw the inside candle on my phone, and I said, all right, and as this came back down, I've mentioned this before, I sometimes will put my order in as the price is coming down in an inside candle. Now, if this had kept coming and broken the level of this, I would have taken the order off and waited for the next candle and put the order somewhere else. But it didn't. This started coming down, so I put the order in. And once these candles form and hit the, bought the order, I bought the order. Oh, excuse me, I can't talk. The order got filled. Once the order got filled, then I put the stop at the bottom of this candle. This is pure strat, 100% pure strat method. That's all I did. And then I'm not on a screen, I'm on my phone. Had I been on the screen, I would have moved this to break even. And I would have gotten stopped out again for by now, this was probably like the 11th attempt or something. There's definitely more than 10. And over half of those were break even. So I'm just getting paying commissions. And a few losses like 28 cents, whatever, 30 cents, something, several losses like that. But this one held. I was risking 31 cents and it held. So then now it becomes about trade management. So, and what I've been saying in the room and what I've been doing in this environment is I'm quick to move the stop to break even, and then I'm slow to move the stop. Once the trade is working, I'm slow to move the stop. Okay, so here I'm already in the trade, and look at that. Boom. What a day. That had me feeling confident this was a good entry because it came back here, and then it really did a nice continuation on everything. The strat, the Elliott wave, other technicals, which I won't get into for the purposes of this journal. So the first lesson is don't give up, manage your risk. It took me 10 or whatever attempts to get this long. Fine. I wasn't shorting it. All I was doing was trying to get long. And so now I only moved my stop. I hadn't even moved my stop up yet. I left all of my stops that I've moved. I left them on the chart for educational purposes. So at this time, my stop was at break even. So I had not raised my stop yet. I only raised, this is about trade management. So I only raised my stop here. Once it poked above this, zone, which is derived from a larger structure. But once it poked above there, then I moved my stop up to the bottom of this structure right here, 107.64. So that was a guarantee of exactly $2 gain. So then I let it roll, and I still left the stop there. And then I only moved the stop up, and I didn't even move it up very far. Once it came back down and touched that trend line and bounced like that, then I moved the stop up to the neck. I didn't move it much, just moved it not even $1. But I do trade management based on the structure, and I'm keeping the stop way behind to let it chop because of the environment that we're in. We're in a chop environment. So I'm tight on the entries with stops, and I'm loose on the trade management raising stops because of the environment. So this is just chopping along. They're not hitting my stop, but I'm not raising it. And then over here, I'm thinking, I really don't want to raise my stop unless we get above 112.39. And I posted in the room somewhere that I thought if we get above 112.39, you get a $3 pop. And I was starting to talk about a $5% candle. I was looking for a 5% daily candle because there were squeezes present. So I still haven't raised my stop. And I'm not really watching the screen very much during the week. There, boom. Now I raised my stop. It got above 112. It behaved just as I had hoped it would and was speculating that it might, just based on a lot of consolidation. And then it finally, this is like building energy and just coiling up. And then bam, look at that release of all that energy, pent up energy. And this was reflected on the daily squeeze and on a 4-hour squeeze, which also helped keep me wide stops, keep me in the trade, be willing to risk all of these paper gains because of the setup. Okay, so boom. Then I raised my stop to 110.74, and I misspoke in the room. This is guaranteed a $5 gain. I put in the room I guaranteed $10 gain. I was just wrong. Trying to look at things on my phone, and I just got it wrong. Just a typo, misprint. But anyway, so up here, now what? Now what's going to happen? So now this stop has not been placed yet. So now this is current event. So this is where we actually are right now. And so I just put that on there because that's where I'm going to raise my stop to at the open. I forget when markets open. It's a holiday weekend. So when futures open, I'm going to raise my stop from 110. I'm going to raise my stop up $2. So then my guaranteed gains will be like $7 and whatever that is, $7.20. $7.21 guaranteed gain. I mean, unless it gaps down a couple bucks, which is unlikely. So anyway, that's my trade management. Keep the stops wide, only raise them up to a place in the structure stay back after the fact, So the price went way up ahead of me before I would raise the stop. So I'm willing and learning how to tolerate giving, and when I'm not looking, it's actually been to my advantage to not be on the screen all the time because I'm not sitting there looking at this saying, oh my God, yeah, if it comes back, I gave back all those paper gains, oh man. And in the past, what I would do is those feelings and those emotions would get to me, and then I would take it off down here, or I would take it off down here. And then when it would start going up, I would chase it and get back in, but then it would stop me out. And you see, I stayed out of this chop fest. I mean, I got chopped over here, but I'm okay with that because what I'm doing is I'm buying it at where I think a good place in the structure is. I thought it was there. I thought it was there. I thought it was there. And eventually, I was right after like 11 times. But the point is, I was taking all those attempts in here. I wasn't doing anything over here. I feel bad for anyone trying to take an entry in this mess. It's much better to try to take an entry at an extreme. So, anyway, what a great week. The journal message is don't be afraid to take multiple shots if you like where you're at in the structure, and move stop to break even quickly and define your risk. And then once you're in the trade, do the reverse. Raise your stops slowly and give it plenty of room to chop up ahead. But that can only work if you've got a really good entry based on structure. So this is all just to remind myself of these things. So knowing the environment you're in, and the environment we're in is this larger chop fest. So I've been saying the same thing for ever since this, basically for 2 months, it's chop fest. So therefore, adjust my strategy accordingly. Okay, I hope this helps somebody out there. Elliott Wave is one thing, trading it is another. Okay, see you guys.